So yeah, so today this is going to be my first trade review. So we had trade review today, which is Tuesday the 28th of April. I took three trades today, three. So I'm gonna go through them. Yeah. Today I was actually bullish, but I see something, and then I flip to bearish. So price came down in the daily fair value gap right here. Plus, it did touch the bullish OB. So I'm like, yeah, we can continue higher. So I was bullish from the beginning. So, yeah. And plus, yeah, I was bullish. It was disrespecting this 4-hour FEG a bit. But I held it. It ran, yeah, technically it ran through it. It did flip it to inversion, actually. But because it touched the daily OB, I was like, might can go back up. First trade I took was 7 a.m. trade. So between 2 a.m. and 7 a.m. market just ran straight down. And ICT said when one side is taken for the 7 a.m. trade, when one side taken, you try go for the next side. So sell side was taken. I took this short term high and then took low and continued dropping from there. So I'll get into this setup. So this was the first trade I took this morning. So I was waiting for this fair value gap, 1 minute fair value gap, to be inverse. Price close. I set a limit order a little above it because ICT always say, yeah, if you put it, because reason being, price can just go tick right at the tick at the high at the fair value gap and just run. So normally you have to put it just look a bit above it. So if it does that, it put your in, because most time it will go there and you don't get in. So I got in right above the inversion of this fair value gap. Then price ran. So this bullish candle validate this OB, came back, respected it, realized the body of the candle, just the wick touch it. When you see that, that's just calling bullish. Ran. Then this turn a proportional block, which you can see price respected. Plus we have a little small 1 minute fair value gap. Price just wick, that's just showing bullishness. Then we have this wick I wanted to see with close above 50% and stay in the upper half of this week. We did. We close above. We continue run, which I like to see. So I went break even when we close above here. I went break even, which was right here. Then we don't want, at this point, when we reach when price close above this week, we don't want it come below midpoint 50%. It can wick down there. The candles can the candles wick can do damage, but we don't want to see nobody close underneath it. So we have this small wick right here, as you can see me label it. You realize price not passing 50% of this week, and then we run out this high. This high, this buy side is basically a 15-minute fair value gap. Yeah. So it was actually this 15-minute fair value gap I aim for. So if price wanted to turned back down. I got my profit and came, and that's it. I didn't want it to touch, and then we dive lower, but I came out there. So yeah, that was that business. And then 9:30 came. So I was actually bullish, as I told at the start of the video. So I was actually bullish. So we seeing when I'm looking for, when 9:30 come, I want to see buy side taken first, then sell side, which we see here at the trade that I took 7 a.m. Buy side was taken. Buy side was taken here again, this short term high. Then price ran and took out sell side. That's a good thing for me. That is in my model. Actually, I'm using ICT 2024 model. So created our first presented. Delete it for a second. So yeah. So after price ran sell side, we create ICT first presented FEG, which is the first fair value gap that form after 9:30. This long down close candle is 9:30. So this is the first fair value gap that form 9:30. Then price tapped it, as I was saying, that price could tap the top of the fair value gap and doesn't put it in. You realize what price did right here? Just barely wicked in the fair value gap in the first presented and just ran. So yeah, that's why I always put it just a couple pips above the fair value gap. So I always get filled when I put a limit order there. So we tapped it here, ran. So I was watching price to see if price could close above the 50% of this, which is the yellow line right here. As you can see, the candle bodies are closing above. We did come back down, but this is suspension block. You have a volume balance right there, and a volume balance right there. So you actually treat it as a fair value gap. So price came down into this. So because we have this suspension block here, I give it a little bit room so it could come back down below this wick. And plus we have this OB right here, bullish order block, 9:30 candle. We tap the 9:30 candle, plus we went into this suspension block, 1 minute suspension block, then came up back and ran. This is the opening range. I use an indicator called, what's this indicator? This ICT opening range gap, blah blah blah. Yeah. So yeah, I was actually aiming for 50% of this, because the model that he created for 2024, he actually said price will go there 70% at the time. And because, as I told you, I was bullish, so I was aiming for this. There was Asia and London high was somewhere above here, but I wasn't expecting it to go that far. I felt it was going to come somewhere up here and turn back. So I was aiming for this 50% of the opening range, and plus at the 50% of the opening range we have these highs. So I was just aiming for these. Then price touched 7 a.m. first presented, which is the first fair value gap that formed after 7 a.m. Price touch it, rejects hard. I was going to jump out right here, but on the 15-minute, as you can see, this 15-minute close bullish, we wicked all the way down here. And as I said, the wicks can do damage, but the body is supposed to not supposed to do the damage. So I was going to close down here, but when I waited to see where the 15-minute candle would close, it came right up back and closed bullish. So that's the reason why I didn't jump out here. Then right here, you realize that price just stopped this wick right at midpoint of this 1 minute wick. My laptop died a moment ago, so I have to plug it in, because apparently my laptop use a 140 volts charger, but I have a 45. So my laptop is just moving like I don't like shit. So I'm gonna try and get a 145 volt. If it's not 145, it's around like 130 ish type shit. But yeah, back to the trade. So as I said, I didn't come out here because of the 50-minute candle. It closed bullish, and then we came right to the tick of it. Let me see if it is actually tick. Just a little bit short of this midpoint of this week. Ran. I bring up my stop about here. Yeah, I bring my stop to about here. So price, I was hoping price to respect this. It wicked. I like that. It keep on making candles in the fair value gap. Then we close, inversed it, and start respecting it bearishly. I'm like, this shit is gonna take me out. I think it took me out. No, I didn't put my stop here. I think my stop was below this week because I came out somewhere here. Yeah, I came out somewhere here. So price touch it, and I was hoping it could flip it back because we have this bullish OB. As I said, the wick can do the damage, but the body shouldn't. We're actually respecting the midpoint of this OB. You realize all the body is closing above the midpoint of this order block, the body of the order block. So I was like, we could, the only thing left is for this to reclaim and close back above the fair value. It didn't. It ran lower, and I jumped out here. So as I said, jumped out here. Then all the time, and then I went back. And looked on all the time frames. Everything was showing bearish. We were respecting this bearish fair value gap, the 1 hour fair value gap. 45-minute was respecting 45-minute fair value gap right here. You see the bodies. This might be. We just closed a little bit above midpoint, but we were respecting it. Same thing for the 30-minute. Same thing for 15-minute, because we were in this, and this was, I think we were below the midpoint exactly. We're just wicking, and the body is closing below midpoint. So that I flipped my bias and said I was going for these lows. I was going for this low. For the wicks, you actually look at wicks as a fair value gap. So price inverse this week. I entered right. Let me move this a little bit. So price inverse this week. I entered right at that bullish candle. Zoom in a bit. Zoom. So yeah, price close, entered. You realize all the bodies of the candle are staying below the midpoint of the wick. That is very bearish. Plus, we wicked in this bearish OB, respecting the bearish OB. Look at that. We're just respecting this shit perfectly. So I'm like, shit, I'm gonna turn it lower. So I entered there. Price ran down, closed below. It came back and inverse our first presented, as I told you back in the video. Close, came up, respected this shit. So you know that when I see multiple PDRs showing a bearishness, you know that we are actually going down. So price ran, close, realize we didn't, the body can't even come back above 50%. Open, ran right down. The reason why I exited right at the top of this wick, because sometimes Trump and his things that he's doing, I realize this market is moving like like it's on coke, like it's on heroin or some drugs or some shit, bro. But so I normally exit once I have a week like this. I normally exit like right at the high of the week because I know it could touch the week and reject. I exited there, and what it did, touch, reject, but it actually it touch, went up, but it went up in our 5 minute fair value gap. Here it is, went up in a 5 minute fair value gap. So yeah, that's the review for today. So if you guys want more, actually I can review a lot. So I'm going to show you guys most of the trade I took. So these are the trade I took from this week to last week. And as you can see, I'm making some banger. I'm making some fucking banger, bro. But yeah, this is most of the trade I took. TP smashing over here. All we do is smash TP all fucking day. But yeah, if you guys actually want more review, we can start doing them from now on. This is an NI video. Shitty.